Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate if you give me a thumbs up here. If not, consider subscribing. There's a reason why people come back and watch more. For one, I've been calling for this downside on AMC after reaching that level of resistance over the uptrend. I called this a reactionary trend heading down, that we'd be finding the 161.8% extension from this little push down we had yesterday. Sure enough, price bounced and rejected, finding a low at 434, which is where the target was. Target reached AMC. There you go. Elliott wave analysis, yet again, strikes. Implied volatility is still increasing as price is failing to set new highs. It's very possible, though, that this is the beginning of a new uptrend. We won't really have that confirmation, though, until we get above 457, really. A ways to go there. For the time being, we're probably going to be grinding sideways between 450 and 434. We could get a triangle through here, little triangleception. That would be appropriate. Typically, that's what I would expect to see after seeing a level of resistance like this respected, then the price rejecting so swiftly. This probably isn't going to be 1, 2, 3, and 4, 5 pushing lower, although if that is the case, we'll be looking for the RSI to set a bullish divergence down here. So what I'll be doing at that point in time is I'll be drawing a bullish divergence, which I use in green, and then the price would be setting 2 lower lows at that point, and that would be happening at this blue trend line touch. This is very speculative. If we come down, look for the bullish divergence on this lower trend line. Otherwise, watch 450 very carefully. That's where our breakout zones are. We get bearish continuation if we make the break below this trend line. We get the bullish confirmation if we get above that resistance level. Volume's been pretty low. I don't know. Doesn't look like to me like there's a whole lot of umph here. Ape also coming down as I expected. We need to get a higher high. We need to break 198 to $2 with a lot of strength to really push out and up. Otherwise, I'm just characterizing this as wave B, and we're waiting for wave C. Back-to-back corrective waves. AMC and Ape taking a hit today, absolutely. Let's go have a look at GameStop. I updated my wave count here. I want to zoom into the 15-minute time frame. This gives us a little more definition in our price action. You can see that we've broken down below what appears to be a falling wedge. It's a pennant in Bulkowski chart pattern analysis because it's not 3 weeks long. In Elliott wave, we don't need to worry about that time frame. We can just analyze the opposing trend line touches and how price moves between those points to identify what kind of a pattern it may be. We have 3 waves coming up to form the first point in our pattern. We have 5 waves coming down. This looks like a 3 wave to me, 5, 3. To me, this looks like it could be a bullish falling wedge. It's in a weird position, though. We would expect to see this particular pattern at the end of a 3-wave form, and it could be. It really could be, but I would need to go back and change all of this. It could be perhaps A, B, C, but it looks like it's in wave B. That's not the right spot for it. Very interesting. That probably means we're in a larger pattern of some sort. It's possible that this is a larger wave B than I had anticipated, and I'll need to go back to the drawing board there. But for the time being, I'm pretty satisfied saying that we've had this pennant. It's common that on the 5th touch point of a pattern like this, that you get the pattern breaking out and then reversing. We're going to be looking for a bullish divergence here. You can see that's already kind of starting. The RSI is failing to push below 31 or 32, but the price is setting new lows. We're watching the completion of a motive wave on a very small time degree on the intraday time frame. And when that breaks, then we'll be looking for a reactionary trend. It could be an impulse heading higher to test the highs at 24.26 or 24.37. I don't see a whole lot of horizontal support and resistance between those 2 points. Maybe at 23.77 where my cursor currently is. We'll see then, though. Right now, the downtrend is holding, but at this point in time, it is an internal trend line because the price has passed through it, and we haven't set a new low to reconfirm it. That means that we won't get bearish confirmation and continuation until 2206, which means the price can move a long way before we start to actually have bearish targets. I'm still expecting 2086 to be reached. This very well could be turning into some sort of horizontal triangle. I'll follow the chart pattern analysis closely. This would make more sense because we'd have this impulse A, big wave B, and then wave C pushing higher. And wave B really could come down to 2086. The only rule for wave 2 is that it can't completely retrace wave 1. And here I'm speculating that this is actually waves A and B. We have to respect that it might be a bigger motive trend down, but don't have the confirmation yet. Right now we're seeing corrective trends hitting up, bullish divergences forming on the low side. So it's going to be a sideways grind probably. Implied volatility is heading down, of course, as price is moving through this trading range. We need to break out above 24.20 or below 22.70 to really get any bullish or bearish targets here on GameStop. Let's go ahead and have a look at SPY really quickly. Of course, SPY setting new highs, just going crazy. The next target's at 465. We have to respect that. This could be, again, A and B, looking for wave C to push higher. Personally, I think that this is a topping out wave, and this exuberant push higher is wave E on a smaller wave degree. Wave E is typically characterized as frantic, almost as frantic as wave 3. This looks pretty steep to me in terms of trend slope. Let's go ahead and just put that down. Like, this is insane. I need to zoom in on the 15-minute probably to really get a good look at this. I mean, that is crazy. And I'll drop this trend line down, and we'll observe its slope too. And I'll color this green, and I use a small dashed line because it's part of a larger uptrend. And it's not. I don't use a solid line until it breaks and it becomes an internal trend line. External trend lines do not cut through the price. Internal trend lines do cut through the price. It's important to know the difference between those two things. I know that a lot of people are less particular about their trend lines, but I just do it the way Bulkowski instructs to do it. Go to thepatternsight.com, check out his website, very informative. You can see that implied volatility here is dropping as the price is in an uptrend. I've said it a lot, and it's because it's typically true that when you see the implied volatility dropping, the price is in a corrective trend, and so here that would be a corrective uptrend, even though we are setting relatively new highs over the last 6 months. We know that SPY is still below all-time highs. Moving up in a corrective wave here characteristically makes a lot of sense. We don't see the RSI reaching oversold very much, just a lot of wave extensions heading higher. We should see those resolve in at least some sideways grind. So right now I'm neutral to bearish, but there is a target up here at 465. I doubt we'll get there. Personally, I doubt we'll get there, but the analysis is supporting that. Remember, targets aren't rules. I'm just following my gut there because, again, implied volatility is not rising with the price. And we start to see that reversal coming in today. I kind of want to see what the daily candle looks like. I don't always like the candles. There's a lot of bias in the colors, the red and the green. When you turn on your trade button here on Thinkorswim, you get buy in green and red and sell. Think of this backwards. Sell should be green. And buy should be red, because money leaves your account when you buy, and your broker's making money when you sell. That is something you should just psychologically know, that the green and the red, those aren't good for analysis. There's a lot of bias there. That's why I don't typically like to turn on the colors. Here you can see we did set a higher high. The price is coming down. What is that? Dark cloud cover? Something like that? At any rate, you can see that the price is setting 3 consecutive peaks, and we have a bearish divergence in the RSI, and this is what I want to go over today mostly, is that when you have these bearish divergences form, what you're looking for is the wave degrees to be completed. So this could be the top of a 3 wave. This could be 4 and 5. Very possible. Looking from here, maybe you have 1, 2, 1, 2, 3, and this could be the top of wave 3. Okay, big push into overbought. Waves 4 and 5. Maybe this completes wave 3, and this is 4 and 5. So this wave 4 and 5 through here could be the beginning of this first impulse, and all of this is all wave 3, all the way to here. And that's why you get the bearish divergence and then the break, and that break is the higher wave degree completing. If this is confusing, on my channel I have a video called Elliott Wave Theory Explained. Go watch that. There's a book I read by Frost and Pretcher called Elliott Wave Principle. I highly recommend that as well. If you're not following me on Twitter, follow me on Twitter. I do a lot of forecasting and analysis in Elliott Wave, and I hit targets all the time. I was talking about NVDA here, and I'm going to be going over this too. Let's just jump to that next while we're moving along. NVIDIA has been pushing much higher after a tremendous uptrend, and earnings were a huge beat. I said we were looking for some sort of triangle through here, after which we would find a breakout. We'd reach the target at 473, 477.94, and then look for a top. And look, this is definitely starting to come out that way. Again, look at the bearish divergence playing out, and this is a similar pattern as SPY, is it not? Where you have these rising peaks, but only in the price. In the RSI, we see descending peaks. We draw that trend line in the RSI, and you get that break of that divergence, and that's where you set your significant high. And because this is the top of a larger wave degree, the reactionary trend that follows moves typically to the second wave that extended, which is this big impulse pushing up, which means we'd be going for a gap fill likely towards 316, which sounds crazy to forecast right now, and it is too early to forecast that. We're going to need to see a few uptrends break. I'll go into that a little deeper over the weekend, I think. I'll spend some time, really break down these charts, and perhaps I'll go and do some deep dive Elliott wave analysis into NVIDIA and explain what I see there. While we're talking about NVIDIA, I want to check out AMD as well. I do have a lot of analysis here, but it's mostly on a larger time frame. Sure enough, we've come up to this peak at 118, very close to the 124, which is the 161.8 extension. Wave B was the target. We hit that today and we reversed. You can see I have waves A and B labeled, looking for wave C now to come down, form wave 4, and this looks like the minor degree. The target for that would be 93.83. However, there is an uptrending support through here and a couple of levels of horizontal support and resistance. The wave C confirmation will need to be broken first before we target 100, and if we break 100, then 93.83. So a few very significant levels to watch there. 107.20, 193, $7 apart, all the way down. Big wick, big sell bar. Implied volatility is now rising. And price is, well, look at this. It's actually rising in this corrective trend, which is really interesting. I typically don't see that. In fact, that makes me wonder if this isn't actually a motive wave. Oh, wait, it is a motive wave. It's wave 5, almost. Unless this, so this would have to be a complete wave 4 heading down, A, B, and C, 1, 2. There's a potential wave count through here that suggests we actually aren't going to go that low. In fact, what I'm expecting is just more sideways grind, and we'll see how the Elliott wave count moves through there. There's always multiple possible wave counts, and it's important to respect that. Watching the applied volatility jump like this as the price is closing lower, it's possibly because of this big trading range, and that's a big range. That's a tall bar. It really is. At any rate, I'm expecting more downside. We hit the target. Wave B, great, looks perfect in my opinion. Going to IWM, I'm looking for support and resistance at 194.40. We just about got there, finding a high at 193.69. That's within $1. Really not bad. And now we see the price dropping down, finding some support. This makes sense. There could be a reverse triangle through here. I know there's a lot of lines, and I need to clean this chart up, and I keep saying I will, and I haven't. But I really think that we're going to see IWM turn down, at least for the short term. So short term, neutral to bearish here. It could be part of a larger wave 5 where we see price push up one more time before we get the rest of the bear market. Typically you get the bear market in 3 waves, and we've had the first 2, one down, one up, looking for the next one down. There should at least be a test to the bottom, in my opinion. And then what I want to close with is PLBY, because this is what's really capturing my attention, and this is where I know most people don't probably care, but that's why I put it at the end of my videos. I've had to figure out what's going on exactly at these higher wave degrees. Does this look good on the 1 hour? Let me turn on the line chart, get rid of this green and red. There we go. Okay, here we are, and I'm gonna do something else too. I'm gonna turn off the daily dot lines. It just helps. Okay, here we go. So I had to figure out why or how I could fit my wave count to support an extended correction heading lower, and it's not necessarily the best thing to do to try to hold on to the same analysis when it starts to break down. What I should really be doing is starting to figure out how this could be a bearish reversal. I think that would make wave A, wave 1, wave B, wave 2, and C3, looking for 4 and 5, in which case we could get a truncated 5th and we don't break that 50% retracement from the initial impulse, which was set on 626, bottoming at about 150, and then pushing up to that downtrend resistance at 184. Price bumped up against there twice. This is called a truncated 5th wave at the minuet degree, shown in blue. You can see wave 3 peaked a little higher. That's why it's considered a truncation. What follows is an ABC, which is a reactionary wave correcting the impulse higher. You go impulse, correction, impulse, correction. That's back and forth, back and forth. And how far each wave goes is how we measure whether or not we're in a motive trend or a corrective trend. We're definitely in a corrective trend, heading down, bouncing, again, testing resistance, going down again, and these impulses are pretty severe. You can see the price just crashes, and then it climbs all the way back up, in another motive wave. And there was a series of divergences here in the RSI as well. And I wanted to talk about this. It could very well be that waves 1 and 2 at the sub-minuet degree here, shown in yellow, were quite small. And what we have is an extension of the 3rd sub-minuet wave, in which case that count is, follow me, 1, 2, 3, 4, 5. This is a good wave count because it follows all the rules. Wave 1 isn't overlapped by the bottom of wave 4. Wave 4 is an ABC correction downwards. Wave 2 could be a sideways. It doesn't seem like the price moved that far. And wave 5 is setting a new high, which is all right. You can see that the points up here are actually above the closing price. That's because I drew those lines on the 15-minute time frame, and within the hourly chart, on the line chart, you're only getting the close. You're not getting the extremes there. So there was an extreme somewhere in there on a smaller wave degree. At any rate, if I want to really show this wave extension of the sub-minuet degree, I'm going to have to bump up the wave degrees and call it a minuet degree, so then I can go back and relabel everything. I don't want to do that. I'm happy just saying it's a third of the sub-minuet degree, and I'm going to leave it there. I don't want to go back and change all of this. I want to keep the WISC wave degree consistent. In which case, it's pretty common to find that bearish divergence between the third and the fifth wave of an impulse. Impulse 3, specifically, I think, is where this is occurring. And then we had wave 4 for retracement. I'm labeling that here as well on the RSI. And then wave 5, again, this is the top of that first impulse higher. And if I do that, if I correct the wave count in that way, what it does is it allows me to use this recent 3-wave action as the reactionary trend for wave 1 or A. If wave 1 or A is here, then we are correcting down, and we're actually finding support near this first impulse on the higher degree. 3. A or 1, I'm sorry, at the minute. So this could be A, this could be, wow, A, B, C, A, B, and then C would push higher. You can see the inverted head and shoulder pattern starting to form through here, right? This is where we get that pattern, is in corrective wave extensions. It's kind of curious because it's following a bottom through here. It's kind of like a V bottom with a handle, which failed, but we didn't really see a new low, did we? No, we saw correction extend sideways, giving us this inverted head and shoulder pattern. That shoulder height coming in at around 168. We're dipping below there now. We will expect to see the RSI reach oversold at the end of a corrective trend down. Typically at motive trends, you see the RSI hit overbought in an uptrend a couple of different times, at least twice, sometimes 3 times. Here, we would be looking for the corrective waves then to be striking oversold just once, and we didn't even get there. It's possible that we don't. There's significant support and resistance at the 50% retracement of the initial impulse heading higher. And while we didn't quite reach overbought on this impulse, it's possible that we also likewise don't quite reach oversold on the reactionary trend either. You can see implied volatility here spiked really high. It went from, listen to this, 114% all the way up to 273%. So we saw implied volatility almost double as price climbed a pretty small distance from 176 to 184. That tells me that in the price data used for implied volatility, we're probably starting to see these lows come into play. And now we're going to watch what implied volatility does in the near future as it flips from positively correlated with the price trend to, well, it's still positively correlated with the price trend, actually, all the way through here until just today we see implied volatility starting to peak, starting to climb as price is heading lower. Kind of funny to see a double bottom there. It's very curious. I'm paying very close attention to what's going on in Playboy at these price levels. It's possible that we're just building a giant triangle, and if that's the case, get this. This is the best part. It's pretty clear that this is a motive trend heading higher, right? That's definitely motive. This next wave heading down between trendline touches is definitely a 3-wave form, A, B, and C corrective. Then we have what I've already analyzed as a motive wave heading higher, right, for 5. And now we're seeing another corrective wave, A, B, and C, where in this wave E, on a smaller degree, we are again forming a triangle where A is down here, B is up here, C, D, and E. And wave E often overshoots the AC trend line, which it is doing here. You can see implied volatility going crazy. We're just about oversold here on the hourly time frame. We could be finding the bottom of this wave. And then what this is, wave, oh my god, wave E becomes a leading diagonal triangle, which is so cool. Anyway, this has been a very long video. If you like, comment, subscribe and stuff, you know, obviously. Happy trading.